My name is Robert Kerr. I am the presenter today. We're going to be talking about understanding capital in the cannabis space. I will tell you that my presentation today is more geared towards lending than equity investment. There is a difference between both. I certainly can speak to both sides of it, but I want to let you know it's more geared towards the lending side of it today. Just a little bit of what we'll do is we'll say who we are, the loan types, that there are usually loans, supporting documents for loan requests, beware false lenders, and prior deal stones.
Yeah, it looks like you're bouncing there.
eQcho is an integrated financial services company. Basically what we are is a consulting firm. I myself am a 20-year commercial banker prior to starting eQcho Capital 3 years ago. My previous bank was called Opus Bank out of Irvine, California, where they're the Pac-12 sponsor. And I actually helped them start their Portland, Oregon office, where I was in charge of their business banking team. And I left that opportunity 3 years ago, ironically this month, to start eQcho Capital, due to the fact that I was getting a large request of deposit accounts and also lending opportunities. And as a 20-year commercial venture banker, I had built a long list of alternative lenders that were always looking for me to send them deals that the bank could not fund. And so my entrepreneurial side of it put 2 and 2 together and started basically taking those alternative investors and sending them cannabis deals. And through great success, I found that working for myself was going to be a little bit more lucrative than working for Opus. Since then, eQcho has grown. We have a relatively large staff now for being a financial institution. We have our Chief Financial Officer, Dave McAdam. He's the former Vice President of Operations and Controller for Waste Management. We have our President of our company is Tony Ogden. He's the former Federal Reserve Board Inspector General. And we have Gwen Gates, who is our Executive Administrator. And we also have a Chief Underwriter, Steve Wiley, who is a 30-year veteran underwriter with Columbia Bank, for the people in the Oregon area. You should recognize them. And then we also have Joseph Lambert, who is our Chief Investment Officer, who helps it on our equity side of the business. As I mentioned, this presentation will be focused more on the debt side, but we also help with the equity piece of it as well. So we do have, as I mentioned, our business model is designed to where we currently have investors that invest through us, who then ultimately end up investing into the space. And part of our job is to put together the deals that are approached to us and allow for that client to structure it in such a way that meets the nuances of the cannabis industry, at the same time also ensuring that it meets the requirements of the client and ultimately the investor. So again, the loan types that we're focusing on today, as I mentioned, is basically in a couple different categories: real estate loans, equipment leases, term loans, lines of credit, and convertible notes. To any of you who have ever applied for a commercial loan through a traditional bank before, these products should be accustomed to you. These things are not new to the cannabis industry. It's just a matter of that this industry in itself has had limited access to traditional lending. But the way I like to describe what these products are is no different than if you were to go down to Wells Fargo Bank and have a small business banker, and you were not, of course, in this industry, and you wanted to apply for a loan. It's very similar. The real estate side of this is stereotypically like any commercial real estate. You're usually applying to buy a property. You're usually looking to take an option on an option and purchase it. You're looking to refinance it, or oftentimes you're looking to do a construction loan. This also includes greenhouses. So a couple of you guys, I think, mentioned that you had some growing experience. So greenhouses, as you probably are aware of, have been a pretty popular method of how people are choosing to build facilities at this time. And so those are just, generally speaking, the overall loan types. This presentation today, by the way, was intended to not go into over detail today, to not feel like you're going to sit here for 30 straight minutes and hear me talk. My goal is to try and hopefully raise some questions and help answer those as well as we go through it. So one of the things that I like to ensure is that I currently at this time take an average of 4 to 5 clients a day that are looking for capital at this time. And I find that most of the clients that come to me are not prepared to speak with someone like myself. And so the reason for this presentation was to help you be prepared. One of the things that I find that is true in not only the cannabis space, but of course in just any industry, is that we understand as a lender that you're passionate about whatever your business is, and we anticipate to have that passion. But to limit what is the more pertinent information, so that way the lender can determine what is necessary to actually determine if your deal makes sense or not. And I say that is in making sure that you have a very succinct executive summary that gives when you started the company, what the company does, and what are you looking to get out of that new capital that you're trying to obtain. Going into more detail on that, I find that a lot of folks don't really understand what the term use of funds. So a sample that I like to give is I have a client that came to me that was looking for $650,000, and I needed to communicate to them that that $650,000 they needed wouldn't be through one source. It's going to be through 3 separate sources, which means that we had to break up those sources into the buckets, those loan types that we just got done speaking to. For instance, the client needed $500,000 to have purchase on a particular piece of real estate. They needed $100,000 for some equipment, and they needed $50,000 for some working capital. And so a use of funds would be as simple as this. I'm looking to purchase a building for $1 million. I would like a 50% loan to value. Therefore, I need $500,000 in cash from a lender, so therefore I can buy the building. The second would be I'm looking to buy a $100,000 piece of equipment, and therefore that is what the specifics of that, and that piece of equipment is going to be X, and it's going to allow me to do Y. And then the last piece of it, the working capital. This is where it can be somewhat general. You don't need to be over specific, but what you don't want to do is just say working capital. You want to try and be a little bit more in the sense of once we have the money, we need to do some marketing. We need to hire some people to be able to hire some sales staff. And we're also going to have to hire a third-party bookkeeper, so therefore we can keep up our books. And therefore that generally piece is about $50,000. The more specific you can be on your use of funds allows the lender to also truly understand what you're going to use it for. The other part of it is that I've noticed that this industry has a hard time doing is showing how that capital will be used and how that payment will be paid back. For instance, using again the $650,000 source is that if this is a 100% startup, and that's what you need the money for, then once the loan is in place, what is the source of money that's going to be used to make the payment until you are cash revenue positive? Those are key terms that I want to incentivize. As we all know, for the people that have been in this industry for some time, depending on geographically where you're choosing to have your business or what type of business you're in, generally speaking, if you have the money, you're going to be relatively successful. However, I find that lenders also view you as a startup. And startups, stereotypically, as a 20-year banker myself, 90% of them fail. That's not a cannabis thing. That's just a startup thing. So I say this because the cannabis industry, which I think it should be treated just along like every other industry, which means by having that to be true, you need to follow what every other industry also has to do as well, by also making sure that you follow the same guidelines that lenders, how they view it. And so showing what the repayment structure is going to be. So in your projections, you need to be able to put, if you have a real estate entity and it's going to buy that $500,000 piece of property, most likely you probably have a limited liability company, which is, I'm finding in this industry, the most common. And therefore, you have to be able to show that what's the source of repayment. Most likely, if you did it structured that way, you're probably leasing it to yourself through a separate LLC. And that lease, of course, then has an actual lease agreement. And then you have to be able to show that that operating company has the money to be able to pay it back. Now, obviously, in the form of a startup, you don't have any revenue yet. So how are you going to do that? And the only way to do that is a combination of a couple different things. One is that you have enough of a personal net worth, that you have enough capital and enough reoccurring revenue of your own to be able to show a lender that you can actually make those payments until the actual loan is profitable by the business that borrowed it. Second, what usually happens from experience is most people have already raised capital and they're coming to me to basically finish what's called their capital stack. So using the sample of if you have a client that wants to buy a $1 million building and they need $500,000 from a loan, most likely what happened is that if they didn't have their own personal cash or a portion of it, then they raised the $500,000 in equity, a little bit extra cash for the purpose of making the payment until that loan is cash positive, and then therefore the lender would come up with the difference. So that was one of the things that I've noticed in this industry is that they come to me and say, don't you understand? It's a cannabis industry. We're all going to make gobs of money. Well, unfortunately, in the lending community, you're a startup. It's not a cannabis thing. You're just a startup. And so therefore, they're looking for you to be able to show them you have a source of repayment. And that's where those projections and how that will work are very important. Yes?
Since the loans can't be federally insured, how are you guys getting around that?
So there's a misconception of federal insurance in regards to lending. And so banks are federally insured. Banks can bank the cannabis industry. There's a misconception that they can't. They don't because of two reasons. What's called reputational risk. They have investors who they don't want to get into an industry and fear that their investors will no longer keep funding the bank. Two, they don't actually have the compliance systems in place to bank it. And that all actually happened due to Operation Choke Point that was actually passed in 2008 at that time. And I won't go too far into the weeds. The other portion of it is that the banking industry, if it chooses to be in this industry and it chooses to actually put in the compliance systems, it's your deposits that are federally insured, not the loan. So a little bit of a misconception. The lenders that I use are actually privately held lenders. They're not banks. They're institutions. They are everything that a bank is without holding your depository funds. So the sources that I have would lend to any industry, but because of my relationships with them and coming from the banking field for 20 years, and I've sent them deals prior to even being in this cannabis space, they understand that I would do the proper vetting and the proper pre-underwriting to ensure that it meets the process. But because it's private money invested into a private company, they're allowed to actually put it anywhere they want. There's actually no federal law that doesn't allow you to lend your own money. The federal regulations for lending only actually has 9 states that require you to actually be registered in to show that you're a private lending institution. Oregon and Washington are not one of them. California is the hardest. And that's not a cannabis thing. That's just I want to be a lender and I want to lend to people in California. Doesn't matter what industry. And the reason at this time is that there's no regulation is that the thought process is that you're a business owner, therefore supposedly more sophisticated than a consumer, and therefore as a business you're willing to take more of a risk. Now, there are what's called usury laws that require that certain states have an interest rate that they cannot go above in charging you a particular rate. There are certain states, Washington being one of them, that do require you until this new rules that are being passed to register that you are a lender in the cannabis space and you want to lend to the cannabis space. It's called registering as a financer, but that's a cannabis-specific thing, not a lending thing. So as a lender now, I've learned the hard way, luckily, what all the rules and conditions are of the different states as we participate in every legal cannabis state throughout the nation now. So I hope that answered your question for you. Yes?
Is the extraction equipment considered an ancillary market, and with this banking thing, are they considering it marijuana as cannabis space, just the equipment?
So an ancillary business is still serving the cannabis space. And again, it goes up to that individual credit union / bank if they choose that they would like to quote unquote bank them or not. Again, there's 7 financial institutions in Washington. There's 3 financial institutions in Oregon. I'm aware of 3 financial institutions in California. I'm aware of like 13 of them in Colorado that they've decided to actually, quote unquote, bank this industry. And it's up to them if they choose to do it. Most of the credit unions and banks in this industry, if they are doing it, then they usually charge a fee monthly to that client to handle that because of the additional compliance that they have on them. As an ancillary business, it's up to that financial institution to do that. For instance, we currently bank with a credit union based out of Washington, and because we're an ancillary business, they're not, quote unquote, charging me an additional fee to do what we're doing at this time. So.
But it's still considered cannabis space.
It is. It's still considered cannabis space. So for instance.
Lights and grow equipment, say?
All of it.
Fertilizer?
Fertilizer. So let me use a really big name. Scott's, which is a very well-known fertilizer company, invests in this space. They might have the power because of the size of their accounts that bank says, you know what, 90% of your business is not related to this industry. We just won't pay attention to that other 10%. That's up to that individual financial institution to make up that decision. And if there ever were audited, then they have to be able to show they did the correct and necessary compliance to do that. So the next piece of it is just some of the supporting documents. These documents that I brought here today are generally speaking what's usually necessary for all deal types. I bring these particular pieces up because I find so far with working with the cannabis space, when requesting such documents, these documents seem to take an enormous amount of time to be received by myself. And I don't know if it's just a lack of internal organization, if it's due to they don't have internal IT systems up. I'm a big Google Team Drive guy, so I'm very organized and I have all my documents in such a way that could be easily found. But I also have to admit, I'm a little OCD, so that might be part of the reason why. I'm actually a little OCD that I actually call myself CDO because I want the letters in the right order. So, thank you, that was a joke. So with that being said, is that I find that one of the things that would be helpful for you is that to not just only have these documents because your lender wants to have you see these documents, you should on your own have these. From experience, working with bookkeepers and CPAs, they seem to be the most logical person that usually helps you with this organizational set from the CPAs and bookkeepers that I've worked with who send me clients now. And from experience seem to be the best at actually giving me these things in a timely manner because they've put together a data bank of these things. These, again, are documents that are not necessarily just needed for me as a lender. You as your own should also have access to them. One, of course, just when you do your IRS. 2, hopefully that the financial statements that I'm requesting are not just because I need them, but hopefully you as yourself review them on your own. Which is another little pet peeve of mine in the cannabis industry is that when I request financial documents, I often find that it's crickets on the other end. And the reason for that being is that what concerns me about that is that I care more about your financials than you do, is what that tells me. And I'm not saying this is true in every single situation, so please, I'm not trying to make it look bad. My intent is to make sure that we are doing what's needed so that way you have all the necessary documents. So if you need help on what certain documents and putting an HR folder, a legal folder, and financials, I strongly suggest to work with a CPA bookkeeper because from experience, that's usually part of the services that they usually provide. So that's a little bit on this piece of it. I also want to let you know for the people that are choosing to take notes today, I will honor that if you choose to, at the very end, I'm going to have my email up. If you write that down, I will email this whole presentation to you in the form of a PDF. So I'm not saying don't take notes, just giving you that FYI. So these next set of supporting documents, I'm going to say are more loan type specific. And the reason why they are important is because it just depends. So for instance, using that sample I did for the equipment order, I had a client who wanted to get equipment leased through me. And they actually were relatively organized, and they had all their supporting documents. But then I needed the vendor quote, and that's where everything got held up, is that the lender, me, I need to know who is the actual vendor that the equipment is going to go through, what's the price, what's the model, what's the make, what's all these different pieces that are necessary to make this actually work. So every single vendor that you're working with to equipment, they all have vendor quotes. This is not something new to them. They do it all day long. When you meet with their sales rep, their job is to learn what your needs are. If you're going to be an extractor, what are you going to extract? CBD, great. For what? Water soluble, isolate, isolate distillate. What is it that you're trying to, what's your end product? Who's your customer? Which of course allows them to put together the correct equipment, which means that they should put that in a PDF or a Word or Excel sheet for that actual specific document itself. So those vendor quotes are important because the lender itself is not going to pay you to pay the equipment lender. They're going to pay the equipment lender directly, not you. And that just ensures that the funds are being used for what they're intended to be used for. So on that piece of it, on a real estate side of it, similar piece of it, if a lender is going to fund a deal, they're going to need a purchase and sale agreement. That purchase and sale agreement is as simple as this. You and a seller chose to purchase a building for $1 million. A local realtor most likely helped you put that together. There's a purchase and sale agreement in place. That purchase and sale agreement should line out what the terms and conditions are. They're buying the building for $500,000. The seller's willing to do what's called a seller carry for another $300,000, or known as a second note or seller carry note. And therefore, you as the buyer need to put 20% down, or in this situation, $200,000. So that purchase and sale agreement should line out all those pieces. And then, of course, if you're going to buy a business, that's where the acquisition loan comes in. You should have a purchase and sale agreement as that. I have a client right now that's buying a retail dispensary in Colorado. They're buying it for $1.1 million. It's a $600,000 loan they're seeking. The seller's going to carry a $300,000 carry second note, and therefore they need to, and then they're going to come in with the difference in cash. Now, I will have to admit, not every client knows how to structure the deal. That's part of my expertise, is that you can come to me and I will help you how to structure it correctly. That's part of what you're getting when you work with me. But if you were to do that on your own, there needs to be a document. So one of the things that we have to make sure is that everything is documented. For people that are currently producers or processors in any state, understand what the state puts you through your metric system and documentation. It's very similar. You have to document where your sales are going. You also need to be able to document the transaction. So in the lending world, we call papering it up, okay? Is we need to follow the paper trail, so that way we understand where all the pieces are and making sure that all of them connect the dots. So that's kind of on that piece of it on those types of loans. And then I'll pause here and allow for a couple of questions since I'm going through this, and then I'll go into the next slide. If there is none, then I will continue on. I apologize, guys. I'm not really, I'm actually a pretty dynamic speaker, but I'm talking about a very dull topic, so I'm doing my best here. Yes, sir.
So you're talking about all these startup businesses and what you require if they're coming to you for money. What about these investors? What do you require from them? At what different levels? Say someone would come in with $2 million and say, I want to be an investor. And they ask you to find something to invest in.
Yep.
What do you expect from us or investors?
Yep, good question. So when I vet an investor, just like I vet my current investors, the gentleman has a good question.
Oh, let me ask, do we need to set up an LLC? Like, I'm out of state. Should I start another company as an investment company before I even approach you?
I will tell you that depends on the state that you're in. So that's a more specific question. Again, I'm not an attorney. I'm not a CPA. But that will depend on the state that you're in. Going back to your other question, before I actually ever take a client and I bring them to a particular lender, I vet that investor myself. I want to ensure that you, as the actual borrower, that they, one, actually have the money that they say that they have. What a concept, right? Two, I really want to understand the criteria of what they're looking for in an investment. For instance, I have a client right now that he has a large real estate loan portfolio. And he came to me, I actually met him at this conference 2 years ago, and he came to me and he said, Robert, I currently do loans in the real estate industry. I would like to do loans in the cannabis industry. Can you help me find deals, put the deals together, and act as my loan officer, quote unquote, and put all the pieces together? And so what I did is I asked him questions. Okay, what you like real estate? What type of real estate? Are you okay with greenhouses? Does it have to be in populated areas? Can it be in rural areas? What type of loan to value do you want? And just to define loan to value, if something's worth $1 million, then 100% of the loan to value would be $1 million. If it's 50% loan to value, it would be $500,000, just for basic math. I think you're an educated crowd. I'd just like to make sure. And from that perspective, I learned he likes to go up to 70% loan to value. He likes to charge rates between 8 and 12%, depending on the loan to value and the credit worthiness of the individual. He likes to, he's told me what specific supporting documents that he likes to see to vet the deal. He showed me proof of funds that he actually had the money that he said, so I felt comfortable that he actually could legitimately fund the deal, so I wasn't having egg on my face at the end. And we walked through the process of how we want to go through the transaction, from me receiving it to submission to him, his timeline to review the information, his timeline to make a decision, how the letter of intent would be issued, what the terms and conditions of what that would be, how we would interact with title and escrow, how we would interact with the appraisal companies. And so for him, I have to do everything. I have to order the appraisal. I have to order the due of the title and escrow. I literally do everything. His only job is to wire the money at the end. Others, they want to do way more. They want to be more involved as my lenders, investors. And therefore, at that time, I make a point to be quote unquote a little hands off. But if I have a fiduciary responsibility to the client, then I still have to make sure I advise them of the process so they feel comfortable. Because no one wants to feel like after you submitted your deal, it went into a black hole, and you hope that someone is paying attention to it. So I hope that answered that question.
Well, I was wondering, just say you have 3 ghosts with money, and they want to start a business, but they're not all businesses. They have private money. Okay, they want to. These people sent me out here. They come get ideas. So should we start our own business, like an LLC, and then come talk to you with our money, like in an account?
So
I just let you talk to these guys in private.
Yeah, I would say.
Money with their private banking,
Yep, I would say your particular situation we probably should take offline so I could get into more specifics. But there are times what's called partnerships, and again, I'm not a CPA. Okay. But, it'd be like a limited partnership. They're called LPs and there's GPs. Again, I'm not going to go too depth here today. Is that, let's say that all 3 of you want to invest in the same type of deal, then it is common to have one corporate body, is what it's called, and you invest through that, and then you all have an agreement of what your contribution was to that. So your capital contribution, again, I'm not going to go into too much depth, but just basically that, and then you'll have a sense of ownership. Then if you choose to be a limited liability company, who's the manager? Is it manager managed? So many different pieces of it. So all great questions. I want to help answer those for you. But out of respect to you, I want to make sure I'm helping you individually. So the last part of it is, I kind of alluded to this, is being aware of false lenders. I kind of spoke to a little bit about folks. I have found in this space, a lot of times people come to me because capital in this space is not well known. It's not like Wells Fargo put out a banner and said, I'm lending today to the cannabis industry, right? The current lenders are not advertising that they are lending to this industry because of that reputational speak I was speaking to. And then 2, they're trying to purposely stay below the radar. Well, because that is true, how do you find them? And so what happens is folks come through me, and then my job is I have vetted them to ensure that it is. Where I say be aware of false lenders is that where it's kind of could be awkward for you is you might have a potential investor, lender, whatever it is. How do you ask them if they're real without offending them and you want their money? Well, that's part of the reason why I say be aware of false lenders is because I've seen this happen. I've seen people take money, give money to other people which they thought was going to be a real deal, wired money to somebody's account, and then at the end of the day, that person really just had no money. And it was a big scam. And I know that seems awful, but it's happened. I've seen it. And then what happens is then they find me through LinkedIn, or I have 150 affiliates nationwide that refer me deals now. And I'm trusted and true, and people know me from this industry, and they know what I'm saying is accurate. So therefore, unfortunately, they've been wounded, and which is sad. So I tell you this because you want to make sure that they actually have a background in doing this. If someone's going to borrow money from you, shouldn't it be a mess that they should be able to give you access to them as well? Like a resume, LinkedIn, something, right? Do they have actually evidence that they actually have done deals in this space? Or if they're new to this space, that's okay, but can they prove that they actually have the money, right? And so that's where it's important to making sure that we're be aware of this. The cannabis space, I have to say, over the last 3 years has certainly evolved in a good way. But I still bring this up is because my nature, I'm a teacher, by the way. My undergraduate was in education. My master's is in teaching, is to protect people. That's just part of the teacher mentality. And so therefore, I tell you that if you find that somebody's super offended by asking you to prove what they're telling you is the truth, you might want to run the other way and just call it done. So just because from experience I've seen so many people happen this, and I don't want the same things to happen to you. Which is why on my website, I'm giving you just 3 samples today. I actually put on my website of deals that I have funded with actual transactions. So clients of mine will actually come to me and say, when I get them to do it, I don't give the overall financial details because that's why I signed a mutual non-disclosure with them. But I am being allowed to advertise that I specifically did this. I bring this one particular deal up because still today, Walnut Industrial Park is the largest real estate complex in the state of Oregon today. And I funded their deal 2 years ago. Okay? This is from another group where I funded $2.8 million through San Diego-based group that's looking to build a dispensary. They bought the building. Again, I can't tell you how much, but they purchased the building. We did a $2.8 million loan for it, and I coordinated everything, the appraisal, the title, the escrow, structured the whole deal, closed within 3 weeks after funding. Yes?
So is it possible to get a loan once you've already managed to work out your equipment and on all your startup costs, and at this point, because you've worked it out on your own, there's no money left for like payroll and things for the upcoming first year? Is it possible to get loans for things like that?
That would be probably a working capital loan. I'd have to look at your personal financials for the business to understand how I would structure it, which I'm not, of course, asking you to disclose right here in the middle of the room. But what would be helpful is I have to understand the full financial picture, and then I would structure a deal in such a way that we get you the money. Yes? Here.
Can you give us kind of a brief description of the terms that you typically offer, and maybe in a range for each of the categories, whether it be real estate?
So let me speak to these specific 3 deals, okay?
We're going to talk about amount down.
Yep. So this real estate deal was 60% loan to value, and I got them 10.5% interest rate on a 5-year term, 25-year amortization. This next one, I got them 10.5%. It was on a 50% loan to value, and it was a 3-year interest only. This one was an equipment lease. It was 36 months, and the term and amortization were the same. So just to make that simple for you, if you guys have ever bought a car before and you go to the car dealership and they say you're going to finance it for 60 months, that means the term and in the length of the term and the amortization matched. In commercial lending, the term and amortization don't often sometimes match. So in this first one, after 5 years, you have to refinance it, but your payments are equal to 25 years worth of payments. That's the amortization, okay? So every deal that I've worked with is slightly different. Working capital loans, that, again, the term that people always ask me is it's so credit-driven, so loan to value. There's so many different pieces that allows me to do that. So unfortunately, I can't just give a blanket answer because it's very deal specific. And she just gave me the 3-minute piece. So I was ready for questions. And I hope that you guys enjoyed the speech today. I knew that we had limited time, and unfortunately, we of course started about 10 minutes late due to technical difficulties. But feel free to ask any other questions that you have. And then here's my contact information. Feel free to write that down. And if we're not able to connect today, I highly encourage you that if you do also take my contact information, I will also email this PDF to you as well. Go ahead, ma'am.
My name's Kelly Ritter, and I come on behalf of Tier 2 Recreational Grow. I'm a producer for producers, so I make clones. They call me Mama Weed. And the first year of recreational, we did 35,000. So people have been growing my weed ever since we've started. Now people are asking for CBDs.
I bet they are.
CBGs, CBNs,
Yep.
THCV. And I've got to step up my clone production for the hemp industry right now. Because people are wanting 2,000 at a time. And I am so stretched after 3 years of rec and not being able to move weed in the system.
Yep.
I did 400 plants this year instead of 2,000. I just killed 1,000 plants because I can't quite move them. I don't have a sales team anymore. So I'm here
Yep.
because Paul Stanford said come and check it out. You need to get it going, Mama Weed. So I'd love to talk to you
Yep.
about infrastructure
Yep.
for my farm
Yep.
and stepping up clones and hemp.
Yep.
I have my ODA application on the desk. I've got the space. Everything's ready.
Great.
I've got all the infrastructure for my rec, but I don't know where
Yep.
I'm at.
Well, again, I don't have business cards, so I did that on purpose, by the way.
Good.
So please take down my information, and I'd love to be able to help you with that. Any questions about the presentation? I know that a lot of you might have individual questions about your specific situation. I feel like I want to take care of that for you guys. Go ahead.
Do you, Robert, operate in any state?
We will operate in Canada or the United States as long as that state is legal to do it in that state. No Alabamas, by the way. Don't bring them to me. You're funny. I know. As long as it's, again, medical or recreational, and obviously you can't apply for a rec loan with me if it's only medical state, right? Yep. Yep. So I'm being given the kill switch. So, guys, like I said, please look at this. Thank you so much. I will be available also over here for questions and answers afterwards as well, and hopefully you guys are able to get my information. I can help with anything else. Thanks.